Hello, my name is Tim Reid, real estate agent in the Calgary area, and here I am with the next market update, what recently happened in April in Calgary 2026. I look forward to getting into the stats with you and showing you what's going on. Whether you're looking to sell, buy, or invest, we're going to give you some insights of what's going on right now in the Calgary market, what that means for you as a buyer, what that could mean for you as a seller, and stay tuned to the end to talk about some investor trends. All right, everybody. So here we go. We're going to start off with total sales. So year over year in this particular stat, we're down 5.7% compared to last year at this time. Now, that is a function of increasing inventory, what's going on in Calgary. We've got a lot of new development right now. If you're moving to Calgary or if you're in town, you know there's construction everywhere. That is down a little bit last year. Also, seasonally, just the beginning of spring, so it's still kind of coming out of the winter the slower season while it's still cold here in Calgary. And we had a lot of snow this year too. So new listings actually down a little bit since year over year last year, 5%. And the total average price is snuck down just a little bit, 3.5%. That's not really that significant in the grand scheme of things. But if we look at the overall trends of different asset classes, looking at single family, looking at row houses, looking at apartments, those numbers tell a different story. So total inventory up just a little bit, 1.8% year over year compared to last year. Months of supply up 8% year over year. So that's 2.84 months of supply. So what that means is if there were no more home sales and there were no more new homes coming for sale onto the market, so no new homes were built, which of course we know isn't true. But if there's no more homes built, it would take about 2.84, almost 3 months for all of the homes to sell in Calgary. So looking at detached homes year over year, just 2.7%, just a little bit of a change there. And that is a function of the balance market we're seeing here in Calgary. Lots of options to choose from, again, because of lots of new construction. So semi-detached. So this is your half duplexes that don't have condo fees. They're down just a tiny, tiny bit, 0.3%, almost statistically insignificant, as they would say in stats class. That's down to 690,000. And row houses. So row houses, quite a significant change, 7%, down to 422,900. Now, I'm going to use a renovation example. So older properties, because we do deal with a lot of investors and help them out. If someone's going to buy an older property, half duplex, for example, and renovate that property, its sort of capped price right now is about 450,000, $465,000. So you can get a newer row house for in the low 400s. That's a significant price gain for the purchasers out there in the marketplace, that those properties have come down to be a little bit more affordable. And they will also include condo product as well in the row house asset class as well. So there could be condo fees there. And then apartments. Apartments continue to drop. They are very overbuilt at the moment, and that is common with condos. They have a cycle just like the overall real estate cycle. And if you want to know more about how that works for investments and different types of real estate properties, please get a hold of us at the number below. So average apartment condo price has come down to 301,000. That doesn't mean there aren't $600,000 condos that are penthouses and $1 million luxury properties in the downtown core of Calgary. There are certainly are those products available, and they cater to a very specific niche. But year over year pricing here, almost 9% downward trend there, just because there's a supply and demand curve very much in favor of the buyer at the moment in the apartment space. So now we're going to look at the overall Calgary community trends down in the core for city center. We've got 3.2% downward trend year over year there. So benchmark price 568,200. In the north of Calgary, the new northwest central area, down 6.5%. 524,000 average price there. That's a significant change in that particular area. Northeast. So the Northeast story here, what I'm going to say here is this is the central Northeast corridor. And these areas are Temple, Pine Ridge, Marlborough, a lot of these areas had such huge price gains over the last couple of years that they're now starting to see a downward trend because the prices, when what goes up must come down. So they shoot up that quickly, they're going to start to correct. We were seeing, renovated homes in the 650 range, 700,000 range. And these are older homes that were built in the 70s, built in the early 80s and into the early 90s. So they're starting to become much older homes. And they were just hitting home runs out of the park for pricing, way over the fences. And now that's starting to come down. And there's also a lot of new product in the area as well, which is starting to drive that average price down. 8.7%, big change there year over year. In the Southwest, we actually got a little bit of an uptick there. There's some new completions in some of the Southwest communities, probably propping to help that average come up a little bit. Northwest, same thing. We as the Northeast, but not quite as significant of a gap. 2.1% down, starting to see a little bit of that, price correction because there's a lot of new homes in the new Northwest areas and a lot of infills going on there too. Lots of new construction, a lot of redevelopment, a lot of infill duplexes, infill skinny homes, and just a little bit of a price drop there, 633,000. And into the new southeast, new southwest, southeast, new communities, sort of the same thing. Again, we're seeing a bit of a saturation there. Homes are starting to be discounted a little bit because the prices were a little bit higher than true market rates, and we're starting to see that downward pressure there. So 5.6% year over year drop there, average 551. And in the new, they call it the South, but I'm going to call it the new Southwest. There is a lot of great properties there, a lot of new townhomes, a lot of new condos, a lot of new single family homes, and a lot of newer houses in these areas, not as much renovation going on. Once you're moving up to the north of this particular quadrant here, you're going to see some renovated homes and things of this nature built in the 80s, built in the 90s as well, where those are going to be some older homes. They're starting to sell for lower prices, competing with the newer homes coming on the market right now. So I always like to take a look at long-term trends, right? Whenever you're looking at investments, it's very important to look at the very long term, not just short-term events and what's going on right now, but how does what's going on today compare to what happened a long time ago? Because again, real estate's a cycle. What's going on the trend line here, this red line is the 10-year average. And each color here codes each different property type. So if we're looking at total sales, the 10-year average, we're below. We're still below the 10-year average for sales for all properties. That's why the whole bar is below that line there. And looking at total new listings, we're sort of above that average. So we've got more inventory hitting the market than we typically would from a sales perspective, which is creating that balanced overall condition and favoring the purchasers in certain asset classes. So looking at single family detached homes here, here's the 10-year average for detached sales. We're still below the 10-year average for detached sales, so we're in a slower moving market for the detached homes. And total new listings is also still below the 10-year average, which is why we're seeing pretty balanced conditions in the single family space. And not a whole lot of price compression in that neighborhood because there isn't a ton of new inventory hitting the market to move the needle to the buyer for single family homes. And looking at apartment sales, this 10-year average here for apartment sales is getting close, but here's the reason why it favors the buyer. Because you see the 10-year average, we've got inventory for apartments way above the 10-year average. And as you can see, like I said, it comes in waves that the inventory will contract down because they need to be absorbed, and then inventory will spike back up because there's a surge of development. Then it'll even back out again, and you'll see another spike. So as you can see from 2020 to 2026, the last 6 years, we've had an upward trend on inventory, which is consistently above the 10-year average. So boom, 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 above, above. That's why you're seeing the ball is in the buyer's court when it comes to condo sales. So when you're looking for, if you're looking to invest in condos, please reach out to us. We'd love to talk to you about that and tell you about the advantages of that and the drawbacks of that. There's certainly advantages to condominium ownership for investments, and there's advantages for investors, disadvantages for investors as well. But this is why the ball is in the buyer's court because we're way above the 10-year average for inventory levels. And looking at semi-detached, so semi-detached again, this is half duplexes, no condo fees. That is what's going on here. So we've got very close to 10-year average for semi-detached sales and just a little bit above the 10-year average for inventory. But these properties are becoming way more popular, more competitive in some areas, competing offers and things of this nature because the The fact is, those condo fees lower people's approvals, makes it hard to get those top dollar prices when there's condo fees attached, which what creates some upward pressure and a little bit more stability for semi-detached because condo fees don't apply to this property type. And this is row house sales. So row house sales does include condos sort of in this category. And right now we've got an oversupply situation going on here because a lot of new communities, lots of row houses being built, a lot of infill activity has resulted in a lot of row houses being built as well. So this is creating a bit of a supply and demand curve in favor of the buyer. There's a lot more for sale than there is compared to the 10-year average. And again, you kind of see these things spike up a couple times over time, but usually relatively stable. This isn't a very popular style of building in Calgary going over the very long term that you see little spikes in development of this type of product, and it only happens, once every few years. But historically, not a very common type of property here in Calgary, but it's starting to become a little bit more popular as we go on. So we'll see if this trend continues over the next 5 to 10 years. But right now, we've got an oversupply, and I'm sure that those will start to absorb over the next year or so, year to 3 years, and then we're going to see an undersupply of this particular property type, and then eventually it'll start to trend up again. And this comes to do with zoning. So zoning in Calgary, recently changed. What this means for you, RCG blanket zoning, boom, it's gone. What does that mean for you as an investor? What does that mean for you as a home purchaser or home seller? What is that going to do to your property taxes and values? Please reach out to us if you're looking to find out what that might have done to the value of your home, what impact that may have made. We'd love to chat with you about that and provide professional guidance. So today, and I'd like to end with a property area feature. What we're going to talk about today, and I'm going to zoom right in down here. Let's just take a closer look. So what we're going to talk about today is this community here in the new Southeast. In the new Southeast is a community called Seton. And what's special about Seton is it's very close to the new, well, it's not that new now, actually, it's a number of years old, but our newest hospital here in Calgary is in the south end of town. It is very, very close here. It's right about here. Also, this is very easily accessible by Deerfoot and Stony Trail. This is where Stony Trail comes around here. The ring road just goes down that way. And Seton has got a huge shopping center, lots of great restaurants, amazing Korean barbecue if you're into that. Great little restaurant there in the Seton area. A very large community, lots of options there. You've got large homes, you've got townhouses, you've got condominiums as options, lots of properties there, lots of great shopping or close to jobs. There's a lot of jobs that are available at the hospital and supporting jobs that are related to that. And easily you can get downtown by hopping, on the ring road and getting up and around to get to the downtown core if that's where you work, or even at the airport. It's, only 20 minutes away to go from this area of town, South Calgary, all the way up to the north end of town if that's where you're working. So I wanted to feature Seton and talk a little bit about that area. It is a new area, lots of new homes, still new homes being built in this neighborhood. So it is a good option and a popular place for shopping and be close to the new hospital here in South Calgary. So if you're looking for advice on buying, selling, or investing in the Calgary region, we'd love to help you out. Love to talk to you and give you some advice about what you need to watch out for in the current market and where things are going and how you can position your offers the best way and what's going on in the residential marketplace. So now I want to talk just a little bit about what's going on in the investment landscape. So we do a lot of commercial real estate. We also deal with investors a lot. I am the investor first realtor because I was an investor first before I got my license. So I wanted to talk about what's going on with small multifamily. There's, large multifamily, lots of big buildings being built, but what's going on with small multifamily? By small multifamilies, what does that mean exactly? I'm saying under 12 units is considered small in Calgary. Once you're looking at 12, 20, 24, and 50 units and above, then you're looking at very large, very expensive real estate assets here in Calgary. And they certainly do exist. They are available, but there's less of them than there is small real estate multifamily assets like fourplexes, like sixplexes, 5-unit buildings, 8-unit buildings. There's a lot of new buildings in that sort of 8-unit asset class. And the interesting thing with that I'm seeing is a lot of these infills in the inner city. And some of these areas, such as Tuxedo, Montgomery, Bowness, which is up up here in the northwest of Calgary, is you've got three townhouses upstairs, beautiful units. Top rents are easily achievable there. But these basement suites and some of these buildings are built like micro suites that are like Toronto loft apartments or Vancouver basement suites where they're very tiny, not a lot of square footage, 500 square feet, 550 square feet, some even lower, 450 square feet. And this is causing some interesting challenges with rentals because there are developers that have built these buildings and they haven't been able to sell them because rents have come down a little bit. And now they can't rent them for what the dollar figures they figured they would have been able to 2 years ago. And I can't fault the developers. It's a very difficult thing to see into the future, 2 years away, 3 years away, and predict what rents are going to be because the rents go up and down based on supply and demand and a variety of other factors, income and job growth, and whether or not people are going to get roommates and how many students are in the mix. So there's a lot of variables, but there is some downward pressure on those smaller, newer multifamily buildings, which are hard to make the numbers work and make the financing work. So that's the challenge that new purchasers have coming into these buildings, which I believe is going to create a trend into seller financing. So what is seller financing? Please reach out to us down below at the number or visit our website. We'd love to book an appointment and chat with you to go over all of the creative financing options there are in the landscape. But sellers of these assets are becoming a little bit more motivated. They still want to get a good price for their property, and seller financing at a high level is a great way to get a little bit better price for your property if you're a seller, and we can navigate you through that. We've done it many times. Or if you're a purchaser, it's a way you can get into a property with less down payment. So that means your return goes up. If you put less money in to get your return out, you get a better return on investment. So if you want to know more about options like that here in Calgary, looking for private sales, if you're looking for private deals, whether it's for flips or whether it is for other types of assets here in Calgary, multifamily, fourplexes, 18 unit buildings, 12 unit buildings. If you're looking for those smaller multifamily assets, which there is some opportunities now because the tide is shifting a little bit, that things are not selling as quick, we're not seeing as many competing offers, that those smaller properties that don't need commercial financing you can buy with 20% down under 6 units. There's a lot of opportunity in those right now, and we would love to help you out to look at properties like that. The investor landscape is starting to shift a little bit more towards the buyer. Still balanced conditions there for certain assets, certain things. The fourplexes in particular can be competitive depending on the area. They can get multiple offers, highly competitive space sometimes because there just truly aren't a lot of them here in Calgary. And especially if they're older buildings where you can do value add, do renovations, you want to raise rents. These types of products are very popular for that reason. And we're also having a lot of investors come in from Vancouver, coming in from Toronto that compete on these deals, as well as the locals that have been looking for them for quite a while. So if you want to know how to compete and win those offers in today's market, look for off-market deals, which we can help you with. We have access to properties here in Calgary. And if you want to join our investor list, please let us know. And if you just have general questions about real estate in Calgary, we'd love to speak with you. We're here to help. My name's Tim Reid, real estate agent in the Calgary area. We'll see you in the next video.